What's good, everybody? It's your boy Slime, and in this video, I'm going to show you guys my STC Renko strategy, combined with M's and W's to basically formulate the best known strategy that has made me profitable today. So without further ado, if you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, make sure you like, share, subscribe. And let's get into the video. When it comes over to Renkos, you got to understand we don't use time frames, we use brick chart. You're going to hear me talk about my 40 chart. This is the equivalent to my 1 hour. You're going to hear me talk about my 20 charts, equivalent to the 15-minute. And then you're going to hear me talk about my 10 chart, which is the equivalent to the 5. We are on the 40 chart. This is where the magic starts. On your 40 chart is where you're going to establish direction. If you don't know how to establish direction, we use a direction finder, which is basically our own version of finding higher highs and higher lows. Feel me? I can throw it on, but I'm just going to show you guys the old-fashioned way. If you're new to candlesticks, the old-fashioned way of finding higher highs and higher lows is the staircase method. In an uptrend, higher high, higher low, higher high, higher low, higher high, higher low. We got higher high, higher low, higher high, higher low, higher high, higher low. And in a downtrend, this is lower high, lower low, lower high, lower low, lower high, lower low. Let's go draw it out for you just so you can see. Once you understand market structure, that's the basic. This is going to help you find support and resistance. I'm also going to show you that M's and W's are going to help you find support and resistance as well. Let's say we're over here in the market. Price is pushed up. Since we're in an uptrend, higher high, higher low, higher high, higher low, higher high, higher low. In an uptrend, you don't want your higher lows to be broken. And in a downtrend, you don't want your lower highs to be broken. You want your higher highs to be broken in an uptrend, and in a downtrend, you want your lower lows to be broken. So when the higher high is broken, that broken area, that high, goes from becoming a resistant to a support. Once you understand that, you can kind of move accordingly. Now, let me one-up you better and tell you, since that's the old-fashioned way, when you're trading Renkos, when you see an M or a W, any W in an uptrend that breaks a structure is now a protected W. What a protected W means is that W now is the end all be all. It is the best place to buy from when price comes back to that area because we aggressively shot from it. So with that being said, this W right here that caused this structural break is the protected low. This W that caused this structural break is now a protected low, combined with this that was a resistance turned into a support. Feel me? This W that caused this structural break is now our protected low. So normally price would have to break below our protected low for us to be going in the opposite direction. This W, see, after this pushed up, did this W break structure? No, it stopped at structure, right? This is the new higher high. You could really drag this over. We wicked it, did all type of stuff, all right? That's in the uptrend. In a downtrend now, same thing. The M that breaks structure is the protected high. Here's an M, neckline break. Did it break structure? No. Where's structure? In an uptrend, structure is right here because this is a lower, higher low. Yeah, higher low. I had to remember that. This is a higher low. Any M that breaks structure is protected. Remember, these are higher highs. In order for us to buy, we have to break above them. We haven't broken above. We wick, but haven't broken above. The M that breaks the structural low, you can use this over here, but this right here is protected. Once we break above, price starts to shift. Boom, all your sells, we buy. Boom, 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 boom. We finally break above. Okay, what happens to the protected M? We're now using the protected M as resistant. W that breaks structure, protected. There's a W here, W here. You can choose which one to use. Let's use right here. Look at what we're doing, okay? The M that breaks structure low, protected. So as you can see, every time we break these areas that breaks structure low, price normally turns around. And when you come to these higher time frame zone, you get your pattern. If we delete all of this, this and I say, let's find external support and resistance, you want to look for your direction first. So higher highs, higher lows. This is as high as we've been, right? You can either drag this all the way across, or you can put it right here and accept those wicks and drag it all the way across. Resistance now turned floor. External. In an uptrend, where's the lowest low? Right here. This is the W that broke structure. Protected. What does this mean? We'll turn it into a color. That means we need to break below this low if we ever want to see sells again for right now. Any long-term sells. Everything is a scalping sell up until then. What does this mean? In an uptrend, if we break the highest high, we now turn the highest high into a floor to bounce off and keep going. So you see it was a red box. Now we turn it green because now we're looking for price to bounce off of this and keep coming back. If you look into what do we have here? Price made a W. Price made a W on support. W's mean buy. Why? They're double bottom. A lot of you've learned double tops and double bottoms, you know, they don't always win. Well, they do when it comes to Renkos because you get rid of time and now you only see price. Get me? So when price double bottom or double tops on Renkos, that's when we actually move. Once you find your support and resistances, these are your key levels, you find your externals. What you want to do is establish your strategy, bring your strategy into play. So your strategy is supposed to tell you what are you supposed to do at your key level. This is my system on finding market structure and my key levels. This is how I find key levels. After the key levels are found, my strategy comes into play. My strategy says for you to find all the M's and W's that matter. We broke above these highs, W here, W here. So what you want to do is either put a line or a box around the neckline break. Why? These are what I call ERZ. And ERZ, if anybody is wondering, stands for expected retest zone. So we have two. I don't like the way this look, but I love this one. We can come to here and bounce up. We can come to here and bounce up. I would prefer this. Once you draw your ERZ on the 40 chart, you will come down to your 20 chart, which is the equivalent to your 15, and you want to wait for your ERZ to be retested. So in terms of gold right now, if we come down to this area, we could spike up and keep going, or we can come back down to retest this area and push up. But one of these areas should get retested tonight. How do we trade M's and W's? Perfect. So here's what we do. When you have a key level and price comes back to your key level, what happens is you want to wait for an M or W to form at your key level. So if you look at all of our key levels, W, a big old M, M, a big W, W's, M's at resistances, but all these are telling you is prices rejecting that area twice or three times in the same amount of time, and it don't want to go up or it don't want to go in that direction, or it wants to go in the opposite direction, however you want to explain it. When it comes to trading them though, you come, you see a W, one, get your double tap. For me, two taps mean we don't want to go down anymore. Price is making the second leg to push up, you get in at the neckline. If you were to get in here, guarantee yourself a nice little 147 tick with 1 micro, 147 bucks. That's a lot of money. Then normally when the neckline comes back and gets retested into an ERZ, that's where you take the first rejection for all your money up. That's how you trade W. Same thing for M. Price come, retest the zone that you have drawn out, the neckline or an ERZ. Price makes an M in the area, get in neckline retest, neckline break to keep dropping. As far as exits go, you have one or two ways to exit. The first way you can exit is having a manual TP stop, meaning, a manual tick goal stop, as in if we get to 100, 200 ticks, I'm going to get out my trade. And then the second option is if we get to a zone and you feel price isn't going to break that zone, you can get out on the first or second rejection. Now, when you're making these trades, stop loss will always go above the M or the W. So check me out. If you're taking this M you get in right here at 44, stop loss is above this structure. Understand? So you can shoot down lower. You take it here, entry right here, stop loss is under here. Ride it up. I hope that breaks down a lot for everybody. If you're wondering where I get my Renko chart from, it's from Obsidian Indicator. But thank you guys and have a great rest of your day.